You got impeachment, you got the continued trade fight, you got these fights in the Fed, you've got earnings which have rolled over a little bit, not too badly. What in your mind of those things, or maybe something else, is going to be the primary driver over the next couple of weeks, months, and quarters?
I mean, I think the big thing, and what I think the market's telling you right now, is that it's already sniffing out that the global economy seems to be, I'll say, at least stabilizing and perhaps getting better. You know, you talked about it earlier that generally, not today, but Japan has been trading really well. To me, that's a big signal. Japan lives off of global growth and trade. They don't live off of their own domestic growth. And I think that's, you know, just one of the many signals.
So maybe Japan, which we've been talking about for a couple of months, is a leading indicator.
Yeah, I think the markets clearly generally move ahead. I mean, they're not always right, of course, but I think, you know, you can look at a lot of these places, you know, the more cyclical stocks acting better, value stocks acting better, small cap stocks acting better. I think all that kind of sends you that signal that we may be getting through this kind of slower patch in economic growth.
It's easy to be confused, especially at 5:07 Eastern time in the morning, which I frequently am. But here's the thing. Stocks are at record highs, and yet earnings growth expectations are coming down. Stock prices are supposed to just be the future value of earnings, so please square that for us.
True. I mean, I think one thing is, you know, third quarter was the toughest comparisons. So yes, we're going to be down, well, you know, let's call it 2.5% roughly year over year in earnings. So it came in much better than expected, or maybe you call it less bad. To me, it's all about moving on to next year. You know, currently consensus is looking for almost 10% earnings growth next year. I would say that's probably too high. You know, that they usually come in too high. But even if you get mid to high single digits, you know, in a world of 1.9% on the 10-year, that's phenomenal real growth.
Yeah, and we've got, you know, the numbers were pretty good. The guidance was pretty good. I think that's a fair statement, right?
Yes.
Not an over-editorialization. I think the question is, are we going to go into some kind of a meaningful economic downturn, which would then further cut earnings? Or do you think the recent numbers we're seeing proves this economy may stay a little stronger than we think for a little bit longer than we think?
No, I think, you know, you've seen, I believe now consensus has moved away from being so sure of a recession, say, in 2020. I think we've been pretty consistent in talking, when we talked to you, about the fact that we didn't think it was coming, and I think more people coming around to that side of it. And now you're getting some other parts of the world that seem to be bottoming, you know, even Europe.
Okay, so what does that mean for your clients, for our viewers, our listeners? What are some of the best parts of the market, here or globally, to invest in right now?
Yeah, you know, so I still like the trade of the more cyclical, the value side of the component versus.
What does that mean?
You know, so I think you're seeing in the industrials. I actually think consumer discretionary looks very good. You know, we'll get
It's been red hot though.
Yeah, but we'll get retail sales numbers on Friday. I think they're going to continue to be good. I mean, when you think about it, jobs in the U.S. are plentiful. In fact, you know, clearly having a hard time filling jobs. Usually when that happens, clearly U.S. consumers
so
like to spend.
some of the retailers, some of the consumer products names, which many of them have been doing well, you think they've got more room to run?
I think they do, yes.
Even in the face of an Amazon.com.
Yeah, and I mean, obviously Amazon's part of that. I mean, they'll certainly be part of the beneficiaries of it. But I think you're seeing across the board, you'll see spending.
Very quickly, you live, well, you sort of live two places, but
Yes.
You spend a lot of time in Houston.
Yes.
I've been there. A lot of oil and gas companies there.
Correct.
They've been destroyed. I mean, literally, just some of them are down 80 to 90%.
Yep.
Is there any value there?
It's really hard. I mean, you know, clearly there's some specific names perhaps, but it is really tough. I was looking at some things, you know, those smaller exploration and production companies have a really hard time. You know, they've got a lot of debt, a lot of capital expenditures. With oil down at these kind of levels, it's tough for them to make it work. Yep.